Hi everyone, welcome to Wednesday. It's the prop trade, and we are at 13:25 here in London. Wherever you are in the world, good morning, good afternoon, good evening. Hope you're having a good one. Trade, well, not the trade, but the chart next to me is the gold market today. The hourly chart on the gold market. We are down today under the key 4,700 level. And we've just poked into our low of the day again here at 4,687. Big news today will be the PPI data that's coming up in about 5 minutes. We have some benign inflation data out of Europe early this morning. This is the entire calendar with all the low impact data on as well. I just wanted to expand it out to show the European data this morning. So WPI in Germany, which is equivalent to sort of PPI that we're going to get in the US in a minute, is actually higher than expected, but much lower. Significantly lower than it was last month, but not as low as markets were expecting. We're expecting a whole 1% decline. It's coming up 2%. The rest of the data, I say, has been fairly benign for the European market this morning. The other key thing I draw your attention to is that 30-year bond auction. We got the US 30-year bond auction later on today. 4.88 it went out last time, expected to closer to 5 later on today. We'll see what that comes out at. In Germany, it's come out at 362 from 358 last time. So obviously the treasury markets globally very much in focus. This issue about obviously the energy crisis causing more than perhaps a one-off spike in inflation numbers. So this PPI data really quite important. That's coming up in a couple of minutes' time. Remember, yesterday we had that really hot CPI data from the US. Quite a big surprise. It was better. It was hotter than expected. And the monthly number was the key one. The core monthly was more than twice what we had last time. So 0.4 of 1% and annualized at 3.8% for the headline CPI. The core annualized at 3.8% as well. So the CPE data, remember, that's issued at the end of each month, still a couple of weeks away for May, that the Fed focus on. That 2% target still remains, but that's going to be added to the melting pot as well. PPE in a couple of minutes. Say gold was down, has been down today. If we look at the dollar slightly firmer today. I should do the foreign exchange. I'll put in the dollar crosses. Dollar yen back to 158 today. 158, just shy of 158, but we're in the 158 zone today. Dollar's recovering there against the yen. Against the euro, we're back to 117 from pokes to 118 earlier. So we're down, earlier this week, down under 117 in early European trades following that weaker CPI data, but it's moved up a little bit, and now it's moving back down again. So the dollar on the front foot. Expectations of the Fed, because of the CPE data yesterday, likely to remain on hold for the rest of the year, despite Kevin Walsh coming in and wanting to cut rates, and obviously chatter now of potential rate hikes even in the United States from the Fed. I think I was looking at the CPE, the CME data this morning. Early this morning, and it's a chance of a hike now. It's not massive, but it's ticked up to about over 30% from about 26% just yesterday before the CPE data came out. So there's a 30% chance from the CME, the guys with their skin in the game, positions in the options market, that the Fed will have to raise rates before the year is out, rather than this cutting rates. And obviously, the longer the energy crisis continues, the larger that chance becomes. Obviously, the other key thing that's happening today is Trump has finally got to Beijing. He landed just less than half an hour ago, and lots and lots of trade to be discussed. It's his bag, isn't it? Loads and loads of CEOs with him. And the big surprise was that Jensen Huang, head of the world's biggest company, Nvidia, is going to come along as well. There's lots of talk that he wasn't going. Obviously, there's two sides to the argument. The world's biggest company, grown very, very quickly over the last few years. Can you hear that rain? We've got a big storm coming in here. I'm actually in my home office today. I'm not actually in the office. I'm in the home office today, and that is hammering quite loud on the ceiling. I'm up in the attic, and it's rather noisy. So I apologise for that background noise. But deals on soybeans. So the head of Cargill's there. Boeing expected to announce a massive deal with China as well. And the data we were waiting for has just come in. So producer price index up 6% from 4.8% on an annualized basis. Let me just bring in the calendar to show you on the monthly number there. 1%, whole 1% for the core. That is a very, very strong number. And 1.8 or 1.4% on the month. So this is going to feed in. You can't get away from this. This will feed in to CPI data. So producer price index up a whole 1% for the month. I think that's the highest rate. So it's on an annualized basis, that's at 6% now, from 4.8%. So 1.4%, the headline, and the key core is up a whole fat 1%. So if we look at this on a monthly basis, you can see what a big lift we've got in May. And this is directly a result of the energy crisis, the rise in fuel costs, but way, way, way above estimates. It's the highest number you see here at a full fat 1% since April 2022. It can be quite volatile, this number, but this we could end up sticking at these levels for a while. You can see this glut here we've had for 2026 to the upside. So this argument about the stickiness of inflation is persistent. It's going to add to the bears on the Fed about sticking with rates, and it's probably going to add to this perception of the Fed having to be pressured to perhaps raise rates rather than cool rates to deal with a rising or a stickiness and a rising inflation curve. Obviously, the president and his administration will be wanting the war to come to an end as quickly as possible, but he started it along with Netanyahu, and the Strait of Hormuz wasn't closed. But his argument is, he said it last night before he left. His argument is now shifting all the time, isn't he? But his argument is that he's not. The damage to the US economy is only going to be temporary, and we've got to take that to make sure that Iran doesn't get a nuclear weapon. But he ripped up the 2015 agreement that Obama and many other countries had signed with Iran and pulled the US out of that. But a producer price index at 6%, a high, I say, we haven't seen here from on a monthly basis since April 2022. So it's a full 4-year high for PPI. It's very hot, and we will see some significant movements. Stocks in particular will be moving down. So here, euro moved down initially. Let's just bring this into the 5 minutes. See the reaction. We've had quite a significant reaction. There we go. We went under 117 again. We're back under 117 for the dollar, but I'm guessing the forex, the stock markets will be hit more significantly. There we are. There's the Nasdaq down. Obviously, we had a flat day yesterday. Where did we close yesterday? So 7,400 on the S&P. So stocks down, and Nasdaq, the Dow gapping. That Dow absolutely gapping down earlier, just on that data. So the industrial stocks reacted more aggressively than the tech stocks, which is quite interesting. So 6% annualized PPI on top of the CPI hot reading we had yesterday. Is this a pivot point? Is this the turn? Remember, the earnings season is more or less done. I think we got Cisco today, and some of some big European companies were reporting earlier, but futures are down on that, and the immediate reaction is a negative move in the stock market. So we might trade that later, see if we get a recovery from that. But that's a significant down there for the indices. And I say dollar probably generally firmer. Let's have a quick run across the majors. So the euro was down to the 117 area, back to 117.8 now. So that, for PPI, that's quite a move, to be honest. Aussie dollar still 72.42. We were yesterday as high as 72, not yesterday, earlier on this morning, 72.50. That's a key resistance area, 72.50, as we've moved higher here. You can see on the hourly rate, there's the peak from yesterday, 72.60. So we're still bid on the Aussie, but been one of the better performers against the dollar. But the dollar coming back on that PPI data, pulling us the stock market's down and the dollar up. Sterling, I haven't mentioned sterling yet, but it's obviously very, very much in focus. There's rumours swirling around here at London that Wes Streeting, the health secretary, he met with Keir Starmer this morning, but it was a very short meeting, which usually suggests, thanks, Prime Minister, I'm resigning, is perhaps to stand against him. But, they promised a safe pair of hands in Keir Starmer, and it's been over 2 years of poor communication, Bonnie. Some significant policies they've put in, some significant policy wins, but it's been sort of swamped by a very negative biased press we have in the UK. But the news has been very, very much swamped by some huge mistakes, none more so than the Mandelson situation. But anyway, sterling down under the key 135 this morning. So that's the key move here on the expectation that we might be seeing a challenge to Keir Starmer incoming virtually, possibly imminently, if Wes Streeting does resign today or tomorrow. I mean, the irony of it is we've just had something called the King's Speech here in London this morning, which is when the it's a bit it's a bit old fashioned, or it's very old fashioned and a bit of an anachronism, to be honest. But the King, or the Queen as it was, reads out what his government is going to do in the coming session, and that's what we've just had. No new news in there at all. It's all these days. It's all pre-released, obviously, but the official announcements were put out there. Nothing really earth-shattering that's going to any particularly new that's going to grab the political momentum back for Keir Starmer. So many MPs want him to go. The favourite is really a guy who's not to replace him, is actually a guy who's an MP at the moment, a guy called Andrew Burnham, who's the well-respected mayor of Manchester, and done quite a good job, but obviously nationally yet to be tested. Wes Streeting has ties to Mandelson, so I'm not sure that will get off the ground. But anyway, uncertainty. Markets hate it. Sterling down quite significantly across the board as well. If we just look at the sterling numbers here against its major competitors. So down here against the dollar. I mean, historically, the 135 is a strong level. If you look at the daily time frame, it'd been going up quite nicely. But the uncertainty from last Thursday, when the local elections came out, we've been we sort of holding at the 136 level, despite the trouncing that Labour got, the amount of councillors that they lost. But yesterday, he didn't. Monday, sorry, he didn't. Again, come out. It was supposed to be a big new policy statement. Yes, I've listened, and we're going to need to change direction. But there wasn't anything in anything he said on Monday that was new. So there wasn't the wobble. I was personally expecting for sterling on Monday. That was more to do with the weakness in the dollar than the strength in the euro in sterling. But we did get it yesterday, and we're down again today under that key 135 level. So this is a real watch and wait area. The 20 day has been breached. The 100-day sits there at 134.80. We're under 135, and then more important, 200-day is all the way down there at 134.25. So it really needs the momentum on the dollar to keep going if this is going to add to the weakness for sterling. But sterling under 135 is the news this morning, and against the euro we're at 86.75. So it's holding up relatively well against the euro, actually. But it's weakened yesterday. Yesterday we went all the way to the the .87 level for euro pound. We're back down. We closed lower, but we're up again this morning. 86.75 over the 20-day moving average. There's the 100-day and there's the 200-day. So upside resistance, but the trend is now for the upside with the political uncertainty that's surrounding the UK. The gilt market here in the UK is also quite under pressure as well. Perhaps not as bad as it was. Obviously, nothing as bad as it was under Theresa May, but it's not that long ago, and it does spook the markets. Obviously, if a more or a less fiscally adapt chancellor gets in under a further to the left, a further prime minister in the UK, that could potentially spook the markets, and that's what Rachel Reeves has been at pains to not upset. So that might not be the case if you get Streeting or Angela Rayner or even Andy Burnham in the number 10, but obviously there's a lot of pain to go through, and it's just more noise and it's more disruption. We've had enough prime ministers in the UK to last us a lifetime, really. But it's all just feeding the opposition, one would argue, and it's really down to it seemed like Monday was going to be a chance for Keir Starmer to re-establish and restart his premiership. That hasn't happened, and the move against the dollar is against sterling is continuing. If you look at the FTSE, the FTSE 10 to 40 down today. It's the daily time frame. Down today, stuck under that 100-day moving average and under its 20-day moving average, which it has been since the end of April. So less movement in the stock markets because a lot of the UK companies make their profits not in sterling, so a weaker sterling has benefited stocks early in the week. But we are down today, really on the uncertainty about what's going to happen politically here in the UK. So anyway, I say the big news: PPI coming in hot on top of the hot CPI we saw yesterday. The details are 5.2% for the core, excluding food and energy, compared to a 4.3%. So that's also hot. And the impact in the US is 10-year yields now are at 4.48. It's the highest level since July. So yields are up, dollars bid a bit as well. Stocks are down, and the impact of the war is starting to bite in the data we're seeing in the United States. There's no question about that now. Crypto, let's have a look at elsewhere. Crypto is back under the key 80,000 level today. It's had held there for since the break here from the beginning of May. We'd held it for 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions. We're trading under there currently in the moment. Obviously, we closed a little bit under 80,000 back there on the 7th after our first breakover. But we still hold 75,000, the 20-day moving average. Remember the support we had on the 75,000 there as we got towards the end of April. The bid is still on, but we are down yesterday and we're down today. Currently, we're into our daily trend line, testing it, but the 20-day, the key technical one there, now sits at 79,000. So the 20-day sits at 79,000. So we've still got 1,000 buffer, but it would be nice to hold the 80,000. But as you can see, the resistance at the 200-day held there on the 6th. It's also held there on Monday as we went into it, and we declined from it yesterday, Tuesday, and today, Wednesday, we're down. So in a key area now, can we hold 80,000? A breach of our trend line from the bottom here at beginning of April. It's not a significant trend line. We've touched it a couple of times. It's just a tighter one there, so it's a bit more of an angle there. But the 20 days, the key one, 79,000 key support area. So hot PPI, 6% headline, 5.2%, 1.4% for the month, and 1% for the core. That will feed it. That will have some sort of impact on CPI next month. There's no question about that. It's how it's managed, really. And if I just leave you, or not leave you, I'm not going to leave you, but just bring this back up. This highest monthly reading there since 2022. That is now 4 years ago, and we remain hot on that one. If we do the same for the headline number, headline 1.4, that takes us all the way back to that same April number there. So are we going to come down like we did in 2022 and in February 2021? So again, might be a bit of seasonality in there, but you can see here, this is pretty chunky. It took a while for that to feed out, and it was the summer before that of 2022 before that dissipated. So we've got this same story now, the stickiness of inflation coming through in the hard data, the CPI, the PPE, and as I say, the CPE number, CPE price index at the end of the month in a couple of weeks will be even more closely watched by the new Fed chair, which is Mr. Walsh. He's been accepted as governor. So Friday he becomes the chairman, and that looks like a rubber stamping exercise. Meanwhile, obviously the stalemate continues. As I was saying yesterday, I can't see the Iranians doing anything dramatic while Trump is visiting China. Remember, China is Iran's biggest oil customer, and they're still getting their oil. But there's all sorts of things on the table. Trump's obviously going to be pushing the trade deals. I say there's loads and loads of people with him. Elon Musk is actually along with him as well as Jensen Huang, the head of Citibank, head of Cargill, head of Boeing. Tim Cook's there as well, the former CEO of and still president of Apple. So huge business delegation with him. Scott Bessent, remember, was in Korea and Japan over the last couple of weeks. He's arriving as well. Lots to chat about. Obviously, Jensen Huang's last minute arrival is interesting as well, given the sensitivity of them wanting to open up China, Nvidia trying to open up China, but they are the leading AI. Remember in Trump's first term, the big thing Obama was talking about with the Chinese relations was all about intellectual property rights. We haven't heard anything about that in the last couple of years. So that's been the key thing. These things that are created and invented in the United States. The globalization meant they were manufactured abroad. Trump's tried to bring the manufacturing about and keep the intellectual property rights internalized as well. But lots and lots of diplomats are reluctant for these state-of-the-art chips or state-of-the-art technology to be in the hands of the Chinese. They're catching up very quickly anyway. I mean, we just look at the state of the AI business and the lack of high intensity data centers some of the Chinese technologies needing. And we see, America caught between this open markets and then protectionist markets. So interesting conundrum for the gang in Taiwan, in Beijing today. So see what comes of it. Also, I say there's some big announcements expected, and they're the ones that Trump will be leading with, the soybeans and Boeing and aeroplane deals and lots of other gifts, no doubt, to be exchanged. But certainly the Chinese seem to be. Sorry, I didn't realise I was still a massive head here. So, and somebody's been talking to me and I've been ignoring you. I can see the red news data, please. Hey, are we getting today a giveaway? No, there's no giveaway today. What do you think about a volume profile, CFD, and unbalanced volume? I like unbalanced volume, actually. It's my favorite of those. I don't really use it, to be honest, Hike. I know a lot of you do. To be fair, my friend, I mean, there's lots and lots of indicators. I mean, the beauty of whatever platform you're using. This happens to be Trend Signal, but they're all available on many indicators. So if we put in volume, I like the on balance volume. This one, if I'm going to use a volume indicator, OBV. It's a trending. It's a trending indicator. It's a combination of volume and direction. So you can see here. No, we just use this as an example. It tends to be trending as markets are moving so that it's a converging type indicator. The volume, the VP volume price. That's V. What have I know? Volume price. Max space. Oh. Sorry, profile. Sorry, just bear with me a second. Profile. You can add here as well. So the on Trend Signal, you've got a fixed range, so you can start from the day, from the week, and you add it. There we are. Does it come up? Doesn't come up. Oh, too many indicators on here. But it's not something I use, my friends. So why isn't it added? There we are. Sorry, it's the range. That was a fixed range. So you can obviously you can add it here, interpret it accordingly. Again, that's just a really good example of it here. This is what we got. We got the daily chart. This happens to be what's this? This is Bitcoin. You can see the pivot here at the bottom of our trend line here. And next high volume was back up here at around about the 90,000 level. So and you can see this coinciding with the 80,000 level and our current price action is here. There we are. You can see we're running into the 200 period, but from a volume point of view, it's not that of a significant level. Unlike the buying we've seen down here, which is why many were getting very excited when we were at the bottom of the range, and we'd been before we'd. It's difficult to do this now, but before we'd been there, we are. If we run that in, this was all about up here. So going back to the end of last year as well. So there's our last big pivot there through 80,000, and the point of congestion down here at 65,000. So that's what lots of players are playing at, and that's why as we roll into since the beginning of the year, that's still in play, but it's not as significant as it was now as we've got as the consolidation phase drifted on. But you can see a break of this again the break of this 200 period. You'd see the volumes kick it in there, but you can see the buying as we've been going. So that's why I said yes last week in the note. You talked about the red news data. It's really the surge of the movement upside. So sorry, hello guys. Sorry, I missed you here, guys. You probably all disappeared now, so I missed that. Sorry, apologies to you, but thanks for being here. Anyway, let's bring that chat back up there. We don't see you there, but yeah. So no, it's not something I use. But if you're happy to, if you want to use it, obviously use it. But yeah, of what you've just talked about there, hike really on balance volume is my favorite indicator of that lot. But I'm going to take that off at the moment. So, and I'm going to take off the volume indicators as well. There we are. Yeah. So anyway, yeah, Bitcoin remains bid to the upside. Like to see it holding 80,000. Big support at 79,000, where the 20-day moving average sits, and the resistance, which is held again, is 82,000. So we're getting a narrowing range, as I said yesterday. We've got this wedge, 20-day moving average and our trend line. So we could break quite significantly, but and break out and move really quite aggressively up, or this doesn't hold and we break down quite aggressively as well. So the downside is obviously the bottom all the way down here at 65,000 and perhaps below to 60,000. But if this breaks, we've got 79,000, the 75,000 psychological round number, the 100-day moving average there at 71,800, and the 70,000 level. So key levels both above and below where we are now on the Bitcoin range. Epicenter still of the whole of the trading world really remains the oil market, and within that the Brent market. So we're $110 today. We were up yesterday significantly. We're up again today as Trump lands in Beijing. Still over $100 here, and we've been over $100 consistently since the 22nd of February. And before that, on the panic as the war ramped up in that first week or so, we went to 120. We went to 120 again there on the 19th, and we went to 120 the end of April, and again last week we went into the 120 zone. So the impact on costs for all of us globally, the energy costs, is significant. And if we've seen hikes in PPI and CPI in the United States, the impacts in countries, the developing countries in Asia that are more dependent on oil and energy imports, particularly also from the Gulf, and Europe as well, particularly also very heavily dependent on imports of energy. That could only, where is the growth coming from, basically? So, this needs to come down if we're going to see any subsidence in inflation or expectations of inflation, and growth in the global economy. And some economies are struggling worse than others, those that are importing lots of energy. And obviously the political arguments then go about, well, why are we so indebted to the oil and gas markets? Let's perhaps invest more in our renewable energies, and that's a big hot political potato. It's not something that Trump would even envisage. He calls it the green, what did he call it? Not the Green Deal, the green fraud. Chucked it all up, threw it all out, and drill, 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 baby, is his mantra. And still many on the right are seeing that as the way out. But and then the irony is that China is by far the world's highest producer of turbines and PVC cells, and the cost of those are dropping rapidly. Time is moving on, and many calling for obviously new vision on that, new leadership. And if this isn't a pivot point, what needs to be? It's a war that's supposed to be over in 4 weeks, and here we are into 12 weeks in, and it just doesn't look like any sign of it going away. The regime certainly doesn't look like collapsing. So oil remains bid and supported by the 20-day moving average. I wouldn't be trying to short that anytime soon. It's very, very geopolitically taken, so be careful trading oil at the moment. Indices, I say, remain relatively robust over the whole course of things. That should show the S&P. We're still at 7,000. 400 we closed yesterday, so that first identification of diversification of divergence on our stochastics and the price action hasn't played out. It's ignored it. It's gone back up, so it can I'll just leave that on, see if because nothing did come of it, and it's immediate. So we've gone another leg high. So is this, are we still going? Well, we are still going. We're still well above our 20-day moving average. That was a technical bit of a glitch, but it didn't glitch as far as if we put the MACD and the main the most common used measure of divergence. So that's the wrong one. The MACD and our standard settings, which won't many use. I know lots don't, but you can still see here where we are, the daily platform. So that's still price action going up. So there's nothing to worry about there. MACD and signal line still going up. The divergence was on the histogram, the difference between the two, but you can see here continuing trending indicators to the upside. Just stand by your bunks. 7,400 has been breached. We're still moving higher. Nvidia still to report, the biggest company of them all. The likelihood of rate hikes becoming more solid will be the thing that will pull this break this rally. So just on that, let me just bring in my CME tool and see what that's looking like for later on in the year with regard to hikes. So as I say, the last time I looked yesterday, the December one was something like 30%. So let's just go to December. So we're currently in the 350 to 375 level. So we now have a 31%. This is what I was talking about yesterday. There's a 31% chance that we will be higher than we are now. And look at this, 5% chance. So we've got if we add this together, this is the 36% I was talking about before. This is over 37% now following the PPI. Is that updated since 746? Yes, indeed it has. So that's updated. So this is by the end of the year. So by the end of the year, there's now a 38% chance. If I've done that maths right, yeah, 38% chance that rates will be higher, not lower, but higher than they are now, and only a 1.5% chance that they'll be lower than they are now. So the consensus is that we 60 plus percent chance, 60, add those two together, 60 odd percent chance that we're getting no change, or no changes at 61.1%. The chance of a cut is only 1.5%, but the chance of a hike is up at 38%. We'll do that math right. 6 and 2, today. So interesting on that. So obviously June is nothing's happening, no chance there. Let's just run through these. Oh, sorry, I've got it on here. I'm talking to myself. Sorry, that was on the wrong screen. Sorry, guys, if you're still here. Anybody still here? What was I just saying? I was saying December. So by the end of the year, what's the chance of a rate cut or a rate hike? Markets now are pricing in a 38% chance. You can see this 37% chance. Sorry, maths. 37% chance of an actual rate hike. This is where we are at the moment. 3.5 to 3.75 is the range. So a 60% chance of no change in interest rates for 2026 at all, and only a 1.5% chance of a rate cut now. So that's where we are, regardless of the new Kevin Walsh being on the side of the cutting regime. And so the data that we've just seen now, I don't know if this has changed today. Oh, no, this doesn't update. It was yesterday, so it hasn't changed as of the data. Let me just refresh that for December. So it's probably too far out, but it's what we were looking at. So end of the day. So let's just go through the current one. So June's nothing happening. July 97.5%, nothing happening. September potentially. It's come down a tad, but it's still 90%, isn't it? Or 87.8%, and a 10% chance of a quite a hike. So 10% chance of a hike by the September meeting after the summer. Expectations that the war will be over there. October, 74% chance. So chance of a hike is more than doubled by October to 20%, 23%, 24. Well, nearly 24%. By October, and 1.9% chance of a cut at the moment. And this is money in the market. This is skin in the game. These are real option positions. And say by the end of the year, that comes down to 60%. But the chances are much higher of a 37% chance of a rate hike than a rate cut, and that has gone up, as we see here, from what was there's the hike there. A week ago, only 15%. So it's a big hike. I mean, that's probably my data of the day. There's now a 30 odd percent chance, 31% chance of a rate hike by the end of the year, as far as the market's concerned, currently, compared to a 15% chance a week ago. And it's gone up. Yeah, it has gone up. It was 30.1 yesterday, and it's now 31.7. So it's gone up a whole 1% on the back of that PPI data. And that, my friends, I will leave with you. So we could see the recovery of the dollar, which is why we've got a bit of a firmer dollar. One of the reasons we've got a bit of a firmer dollar today. Okay. So Any trading opportunities out there? Let's have a quick scan. Let's use this platform. See what's going on. Somebody was asking me yesterday because we were using my 5 minutes is my default setting, and the mean reverting strategy is my default setting. But somebody was asking me yesterday, could we use a short? Does it work on a short time? Yes, it works on a short time frame. It generates more signals, obviously, but they're perhaps less reliable. I'm happy to do that when we're looking to go live. This is looking to this has been short, and this is looking to, this would have closed out now. So this would have been just using this one as an example. So on this strategy, that would have flipped short there. Well, you can see it's been going down, but it's been flipping around. That's why we use MACD to smooth out the flippiness of the parabolic saw. So the last flip, if you like, or the last cross, and the confirmation one was here. So you'd have been short here because there's a nice gap in the two lines, the MACD and the signal line. The 5 minutes earlier, when it it looks great now, but when it actually happens, it's very smudgy. So I'd have waited to that. So this would have triggered you a short position there. Just mark that on there for you. In fact, have I got any lines on here from yesterday? No, I haven't. Just take them all off. So that would have been your short, not that one there because it's too close. You would have got in here. That would have been your entry. The stop loss would have been around the turn, so it would just stop at where the parabolic saw is to start off with. Stop loss would have been up there. So that's our risk. Remember the key thing, regardless of your lot size, regardless of your position, if this suddenly, so if this within 5 minutes suddenly hits your stop loss, when you lose, so we got in at 741, so 7411 and 7421. So there's 10 points. Let's get I should keep the maths quite simple. So there's 10 points here. So there's 10 points up for grabs here. That's our risk. So that's our risk. So that's our risk, guys. And so if this goes wrong, we're losing 10 points. What does that mean to my account? Well, we want to take a position that is only going to lose us 1%, ideally. My drawing's appalling. Excuse me. 1% of our account if this goes wrong. So we take the lot size accordingly. So it's gone with us. So it's moved lower. So we've moved our stop loss. Sorry, take that off now. So we move our stop loss now. Sorry, we haven't moved it straight away. So remember, stop loss that's our entry. Let's put the entry sign on. So that's entry. And again, you can use a ATR to create your target. We were looking for a cross out or a flip. So that's flipped now. So that would have been out. So it got in here. Strictly, as that was a big candle reversing this big move, I would have probably taken out on the close of that candle, but it's out anyway. So that's the entry. Stop loss is up there, and that would have now not technically, but it would have been, have closed out there. Okay. So we've got in at 7,411, and we've got out at 7,406. Call it 7. So we made 4 points. 4 points on the what is this? The S&P. Again, it's not one I normally trade on a short-term basis. I'd much rather use the Nasdaq or the Dow. But anyway, just using this as a demonstration purpose. So that's now closed. Okay, so that would have been the stop loss. As the price moved on, so we got in here. Stop loss still up there. I might have pulled it down with the parabolic start to start off with. This big candle here would have meant me pulling it down quite aggressively to the entry. So knowing at this point here, I have this big down candle because we could have had an instant reverse. So I'm locking in so I don't lose. But normally the momentum is going. The histogram is still dark red. We only turn to pinkish, less positive to the downside as we complete this candle. So that will be in the first heads up. The signal line kicks up. The MACD line kicks up. Sorry, not the signal line. Signal line's the purple line. But we haven't yet crossed, so that's not another signal to go long. But the parabolics are flipped at this point, and so we were out at the close of that candle there. So we've made whatever it is, that 5 points on the S&P on this strategy. Thanks very much for now waiting for another another cleanup. So let me just clean up that. But the key thing is that if we did reverse, focus on what you would have lost if it had hit your stop loss as we moved it down. And obviously, let me just finish cleaning up all of that. Obviously, sorry, I'm staring at the camera. Obviously, with the initial stop loss up here, as we pulled it down to our entry, and we were on our entry, and so we couldn't lose on that. We're not losing anything, so the risk has disappeared, and it's all profit. It's not a lot, but think about this. You're guaranteeing yourself some profit. It might be as much as you wanted or whatever, but it's still a profit. You do that a few times a day and it soon adds up. You compound that by adding more to your account, scaling your account, which you've just done a little. I just did a little video last week about that. Hopefully, be producing that'll getting kicked out or sent out to you all this week. You soon. As I say with this business, that there is no ceiling to it. The roof, there isn't one. You make as much as you want, but it's all about managing the risk and keeping the risk simple. So let me just reiterate that. So that was our initial stop loss, this distance here. So if we keep this small, 1% of our account maximum, a few points, nothing like risking 5%, 10% of your account. Keep it small. We did move all the way down, but this is how this system works. It's a reversal system. So that would have definitely been out now. This might be looking to go long now, actually. So we'll see how that finishes. So that's the trick. If there is a trick to trading, that's it. Always focus on your risk management. Always focus on what will I lose if this goes wrong? How will I feel? Whether it's in dollar terms, whether it's in percentage terms, whether it's in your pip terms or points terms. That's how one thinks. Okay, so let's have a look what else is going on. The Nasdaq also about that. See, that hasn't yet flipped, but it's done the same thing, hasn't it? Hasn't crossed yet there on that one. So we'd be waiting for that. That one has flipped already. The Dow has already flipped, so the Dow would have been long from here. So let's just do that whilst we're here. So let's buy that. We confirm. Oh, I should have done that with a stop loss. So let's just make that bigger. I've just put that place in position. So where's the stop loss? Well, ideally here, because that's the flip. We've crossed here. We've gone green. The stop loss should be down, at least down here somewhere. But like I said before, we've had this big uptick. So I'd be, okay with it a bit tighter to start off with, but not too tight. So let's put our stop loss down here. 49520. So we put our stop loss in. We want it at 49 backspace. Let's do this in a percentage term. So 49, what did I say? 5. Let's call it 19. So it's under the round number. And we want to, we're going to trade it risk terms, but I want my stop loss still at 49519. So I want 1% of my risk. So it's saying here I could have bought 10.6 lots to risk 1% of my account. Obviously, we've just taken a demo position, and that's the beauty of Trade Locker, my friends. This is one of the big buying points of I would argue of Trade Locker, is that you can do it on a risk percentage, and my stop losses needs to be where it is because it needs to be there. I'm risking 1% of this 100,000 demo account. I can have 10 lots. Okay, let's do it. Well, actually, let's do it. Just half a percentage means 5 lots. So let's buy that as well and see what happens. So there's my stop loss. There's my entry. We're a bit late in, so we know we've got to be mindful that we want to get out. Well, where might we go? Well, my strategy, remember, is I'm waiting for the parabolic SAR to flip back down or the MACD signal to cross. So you've got to be patient, let it happen. But clearly, there may be some sort of resistance through here. Why am I saying clearly? Well, that's where we've been. We've been sort of meandering around these prices, haven't we? So a bit of resistance there, possibly. There might be a move back down once we've filled that gap, because that's what that candle did, that technical candle there. Unsurprisingly, it was at the top of the hour at 2 o'clock my time. So it's 9 o'clock in the United States. We're still 15 minutes away from the open, ironically, as well. So we're running into the open. We've got all that to contend with as well. So if we get to this level, I'd be happy to close, half of my position on that. But let's just show what's open. We got that little zero point 0.5 contract, which is actually out of the money. It was in the money a minute ago. It's out of the money. And the 0.5%, which is the 5 lot size. So number size is obviously much, much bigger. If that returns all the way down there, I lose 0.5% of my account, wasn't it? I need a I want a drink with me today, but we'll see what happens. But we're possibly expecting it to get back to that level. But the fact we've filled the gap is now sort of stalling, and we've obviously got the volatility of the open. I forgot what time it was, but so the actual entry would have been there. We got in on that one there, so that's our entry. So let's just go have a look what other systems, and that's the Dow. Remember, so we've got that divergence in because it's already crossed. The Nasdaq is looking to cross. It's flipped here. We haven't had a clean cross, so that may a few minutes, a few candles away before that happens. But obviously, but the issue is we're running into the open. We've got the volatility of the open to deal with. But as far as our Dow position, let's just leave that one on. And that's my default 5 minutes. Sorry, I started this talking about people that were wanting to look at the shorter time readings, but that's the 5 minute. And if we'd done it on the 2 minute, let's go down for when we're doing it live. I'm actually doing it live. That would have crossed. You can see that's not that. That would have crossed there. So that would have been in at 2 o'clock. So that would have got you in earlier. So you get more signals or triggers, but you get more choppiness as well by its very nature. So more false ones. But that would have been the 2 minute one. We'd have got in at 581 as opposed to when we got in at 622. So when we got in. It's moving high, but I'll be interested to take some profit as we get into this area here. And again, I wasn't expecting to try live trade there. So where are we on the day as well? I think that's the low of the day, isn't it? If we, I just go up for the. Just bear with me a second. So, oh dear, it's very messy, isn't it? Oh dear me, that's. That needs tidying up. Sorry, I didn't realise that was all like that. Let's go at the 15 minute. So our low of the day. When was that? Was yesterday. So today is started over here. So yeah, we've caught the low of the day, and our stop loss is at the low of the day. So might be a bit premature, but we'll see. So I need to tidy all this up. But, anyway, our 5 minute trend is up and running. And I'm saying I'll be taking some off there. So stocks down, but we've caught a bit of a bounce there on a 5 minute. We'll come back to that in a minute. Gold, we said, was down. Gold energies relate higher, and forex dollar a bit stronger today on the hotter than expected PPI data, which there we are, which is coming at 1%. For the core, that's 5.8% annualized, and the PPI at a huge 6% annualized for that 1.4 for the headline. So that is what is moving our markets today. Less news, obviously, anything that Trump might say when he's in. I don't know if he's going to say anything. Now he's just landed. It's quite late in China, obviously. Nothing getting said today. I'm not sure actually what his schedule is, but I'm sure he'll have something to say. And the chair, so he's been, excuse me. So Walsh has been nominated. It's been accepted as a member of the Fed. Now he needs to be voted by the Senate to be on the later on today on the as chair. So and then he officially takes over on Friday. So there we go. Now we'll be with you tomorrow. What are we doing tomorrow? Thursday. We're going to trade the close again tomorrow with Trump. I'm out again most of yesterday, tomorrow morning. So we're going to trade the close like we did yesterday. It was unsuccessful, in all honesty, yesterday, wasn't it? Those of you who were with me. The day before, we've been unsuccessful because we didn't follow the rules. Here we follow the rules, and we're in the money at the moment. And our stop loss, we're all the way down there. Perhaps we can ram it up a bit now that we've it's going with us. And if we do, it does reverse. So let's. I think you can't move it, can you? So let's. Oh, there isn't a stop loss on that one. So let's edit our stop loss and bring it up a bit halfway through that big candle, or make it nice and tight actually, because we're coming into. So our stop loss now sort of fill the gap. Oh, halfway through the gap, 49,583, 49,583. Let's bring it up. So confirm. So we haven't changed. I remember the risk was 0.5 and 1% for the account for this lot size. So we've now by default, haven't we? We've reduced our risk even if we get stopped out. So it's even smaller because we've gone up. So there we are. So we've hit that first zone I was interested in. So I'm going to close half of that. Oops, I'm going to take partial profits again. It's really easy to do. So we take 3 of that off. So I'll make that 3.36. So we're closing. Actually, let's take 2.36. So we'll leave on 3. Oh, we've left 3 on. We've taken 2.5 off. So we've bagged some profits. We look at the close position. There we are. We've taken out $58 of that of that position. So we've taken over half of our position off into this cluster zone here. We're coming into the open. It might be prudent. We could have some big moves, but stay calm. The MACD and the signal line are moving up quite nicely. The parabolic SAR's all the way down there. We've rammed our. Is that our stop loss? No, our stop loss is here now. Our stop loss is here. So it's way above our catastrophic stop loss area down here. So the volatility of the open could easily take us out, and we'd lose on our second half, and we'd end up losing as much as we've gained. But let's move our. See how this candle completes. It's still got a couple of minutes to complete. One would expect a bit of a red candle to come because we've had 1, 2, 3, 4, 5, 6 consecutive green candles. This might actually finish green. So I'm going to pull the stop loss up again a bit tighter in a minute on this completion of this candle to 49600. I was showing 49600. So let's change it, or just above 601. Actually, should be a bit below, shouldn't it? Got it, 98. So 598. So there we go. So we have got that red candle completed. So we pull the stop loss up a bit more. So if we've taken off 3 lots. We've still got we've taken off 2.36. We've still got 3 lots. 3 lots 0.05 still open. They're both in the money. So we'll see if that reverses chart entry potentially. But you'd expect this one. So we had 1, 2, 3, 4, 5, 6 consecutive green candles. The gap's been closed, so you expect a bit of resistance here, as we've seen before at the pre-market area. That was the area we were looking for. So that's where we got to. Next upside target would be a little bit there, but then will we get here the 11 o'clock candle there, 49,696. Remember that we're against the trend. If we go up to the higher time frames, so we go up to 30-minute time. So we're still down. We've bounced significantly in this half hour, but we're still down. 30-minute parabolic SAR is flipping during this current candle. Okay, the hourly candle will still be negative. I'm guessing. There we are. So still. There's the hourly candles, negative, and we've got a bounce in this current hour. So that's the background of where we are, and we're trading the 5-minute time frame, aren't we, to the upside? So our 2-minute calendar might have already flipped. Who knows? Let's have a look at the 2-minute time frame. No, 2 minute is still good to go. It's our stop loss will be probably where it is actually, even on the 2 minute, because we've had that first significant down candle from our entry here. The big candle, remember, at 2 o'clock. I won't put that on there, but that's our 2 minute entry. Would have been now following this big candle here. Stop loss down there. So pulled up. There's entry. So stop loss above entry. That's our entry, isn't it? Sorry, stop loss below our entry. So, my stop loss on entry on the 2 minute, but the 5 minute is the one we are playing with, and I'll let you know tomorrow how that pans out. So I'm going to wrap this up and go and get some lunch because my hour's up. Okay, take care, everyone. All the very best. In fact, I've run over an hour, haven't I? I wasn't expecting to do some live trading, but anyway, we're in the money at the moment. Let's see how it finishes. If this is just a reverse, and see what the open looks like. So take care. I will see you all again tomorrow for the US close tomorrow. We will do some live trading around there and see what Trump's had to say, why he's in China. And I think we got Cisco results as well tomorrow. So take care, everyone. Be good and be safe and be kind. All the best, everyone.